everybody, and welcome to 2024. I hope everyone had a fantastic holiday and is ready to get back to the grind. I know that I sure am, because I couldn't wait to get those damn kids out of my house and out of my hair, figuratively speaking, of course. Welcome back to the Texas Real Estate and Finance Podcast. I am your host, Mike Mills, your friendly neighborhood mortgage banker here in the Dallas-Fort Worth Metroplex. And today we are going to be discussing an issue that everyone is facing, whether you're in real estate or not. And right now, I don't know that there's a ton of attention on it in the corporate media space, which is why I'm bringing it here to you today on my tiny little podcast that could. So, and that's the rising cost of insurance. Now, I'm the first to tell you that I really don't pay attention to my insurance premiums hardly ever. They just get auto deducted from my bank account each month, and I couldn't tell you what I'm paying off the top of my head either way. But I do know right now that it's a lot, especially because I have a teenage driver that just recently hit the streets. But today we're going to focus a little bit more on how it affects housing and people's ability to qualify for homes in an already critically unaffordable housing market. And this is just piling on. And if you haven't been paying attention to this, then you should. But we aren't talking, small little increases. This is pretty significant. So, but before we get started, I'm really trying to grow my podcast significantly for 2024, and I'm asking for your help. This thing takes time to schedule, produce, publish, and all that kind of stuff. And the more subscribers I get to the podcast, the more likely I can to continue adding content to what we bring you each and every week. So, it would really go a long way of reaching our goal of 4,000 subscribers by the end of 2024. If you could share this with everybody inside your network. I appreciate all of you and listen. I appreciate all of you that listen and reach out to me and let me know that you've been loving what we're doing here. And the more we can get on the more people we can get on board, the bigger we can grow. So tell a friend for your good friend, Mike. Really appreciate it. So now let's get into it. So my guest today is a 25-year plus veteran of insurance to tell us what the hell is going on with the insurance bill right now and how can I keep my costs as low as possible. So please welcome my really good friend, Brad Bingham, to the show. Hello, Brad. Let me flip you on there. What's up?
What's going on?
How are you, man?
Another day, another dollar.
Yes, indeed. Yes, indeed. So, let's just kind of get right into it, and we'll bounce around to a couple different spots. But so what the hell's going on? Why? I was reading something the other day, and it said this was, I don't remember if I saw it. It's a Wall Street Journal, something like that said in 2022, insurance premiums on average went up about 21%, and compared to 2021, where they went up. Or excuse me, in 2023, they went up 21%. My years are getting all screwed up at the first of the year. And then in 2022, they were up 12%. So just in the last 2 years, we're like 35% higher. So what the hell's going on?
You're probably looking at national averages.
Yeah, these are national,
and,
yes.
In Texas, it's probably worse than that.
Oh, okay, great. Good news, good news.
So unfortunately, we all live in the same world where we have young drivers that are starting to enter our policies. And
yes.
If we could have done this 10 years ago, we would have been much better.
Would have been much nicer, yes.
Yes, but man, the biggest issue is just availability. When we went through the crunch during COVID, insurance companies burned up reserves.
Yeah.
And when you burn up reserves, that eliminates your availability.
Mike, a little closer to you.
I'm sorry.
No, you're good.
That eliminates your availability to be able to write insurance. And so what that means is when an insurance company writes a policy,
okay, in
order for it to be secure, they have to have reserves, right? Okay. And so for auto, we have to have $1 for every auto premium we write. For home, I'm gonna ballpark it's $4 or $5.
Yeah, nobody's auditing you. You'll be all right.
When we write a homeowner premium, if we put $1 premium on the books, we have to have $4 in reserve. Okay. I'm going to tell you in Texas, you're probably better off at $6, $7 in reserve just to be able to pay losses. But it's required to have the $4 or $5, whatever it is. Okay. If you don't have that, then you're not an admitted carrier in Texas, which means if you go out of business, your customers are up,
right.
Creek with a paddle.
Yeah, shit creek. It's fine. Right. Again, we're not broadcasting to 5-year-olds. It's fine.
So most of your big carriers are admitted carriers, so they live by the guidelines. And so when our reserves go from, let's just call it 40 million to 20 million, that makes it where we can't write insurance unless it's a really good customer, because we don't want to take up our availability. Right. Does it make sense to you? Mm-hmm. So
you only have limited slots, essentially.
We have limited slots, right?
You don't want to write it to somebody that is going to have a bunch of claims if 100%. You can figure that out, right?
All right. So availability is one of the biggest issues right now.
Okay.
We've had carriers pull out of Texas. We've had carriers that have just completely shut down, quit writing business. All your small guys, your Do
you know who's pulled out of Texas specifically?
Oh man, when you say pull out, that would mean they're non-renewing customers. Okay. I don't know of anybody non-renewing customers yet.
Okay.
When I say pull out, they're not writing new business.
I got you. So they're not adding to their portfolio.
You go shop your premium, and you used to have probably 10, 15 companies that would write a policy in the Dallas-Fort Worth area. Okay. We're going to talk about 4 specific counties right now, because Dallas, Tarrant, Denton, and Collin are the ones that are having the issue, and it's all driven off of wind and rain, wind and hail. Okay. And so when you have these availability issues, you go shopping. Used to, you get 10 different quotes back. Now you're getting 2, 3 maybe. And those companies are like, well, we're not going to write your business. Right. And they're like, well, why not? Well, if you're not the cream of the crop, they don't want you right now because they don't have the availability for you. Right. This will all get fixed when we build our reserves back up. But right now, while reserves are tight, we're gonna reduce the number of claims you can have had in the past. And that's why when I did the podcast with Cody and Eric, claims are such a big deal, right? I mean, if you don't have pristine credit and very few claims, you're not getting new homeowners insurance right now.
Right.
So you're stuck with what you're paying. And if you go up 40, 50%, you're gonna have to eat it. And it's not fun right now.
Wow.
This all will get better, but right now I would tell you we're probably, Allstate's very, I'm going to say, on the forthcoming of things. So we're always up front when we have rate increases. We're typically the first to take them. But what happens is when everybody's up shit creek, we're paddling back up creek because we've already weathered the storm.
Right.
And so right now I feel very strong that November, December, Allstate's kind of turned the corner here. We did take a recent rate change, which was a single digit rate change compared to the double digits we've been having. So when you see a single digit rate increase, you're like, okay, we can sustain this. That also tells me things are turning around. Right. And so hopefully that's the last rate increase we have. I call it 2024 because everybody's renewing in 2024, but hopefully that's the last auto rate increase. Homeowners, man, with the availability issue we're having right now and the number of carriers that are not in the marketplace right now taking active new customers, we're probably going to be in this for probably another 6 to 12 months, I would bet.
Really?
Yeah.
But I mean, when prices go up, they don't often come down, right? Unless you're dealing with
they usually never come down.
Right. That's what I'm saying. So I mean, so you're saying that we're going to come out of this as far as no more big hikes, right? Not necessarily that it's going to get significantly cheaper, but
cost drives all this.
Right.
If cost comes back down, the premiums will have to come back down because we're all regulated, right? The state commissioner is not going to sit there and let them rake in record profits every year and not bring rates down. So if cost comes back down, rates will come back down.
Yeah.
Now to the 30 to 40, 50%, probably not.
Right.
Our cost has gone up. Our labor has gone up. Everything's gone up.
Yeah.
We haven't put our head in the hole thinking nothing's going on right now. Right. So once we get through this storm, during COVID, we had a supply issue. The supply issues are getting fixed. Right. And so once you fix a lot of the supply chain and the log jam, everything else is going to fix itself out. Right. And so that's all kind of working itself out. But for homeowners, man, I've been in this, like you said, I think this is my 25th year starting in January. I went through the mold crisis in 2001.
Oh, that mold crisis. We all remember that one.
Dude, look, prices doubled overnight. Right. We went from $400 to $800. Right. And everybody was like, oh my gosh.
Yeah.
Now the average homeowner premium, I'm going to tell you, you see them come across your desk every day. They're $3,500, $4,000 average annual premium with, a lot of those are 2% deductibles. Right. I completely for my 25-year career have steered people away from 2% deductibles. Right. It's not good for you when you have a claim. It's only good for you now.
Right.
And so you have to do a math equation. In the old days, when I would change somebody from a 1% to a 2% deductible, it would take you 7-8 years to save the difference in your deductible.
Yeah.
So a little math here. You have $1,000 deductible. I bump it to $2,000 and you're saving $100. It's going to take you 10 years to save that difference in deductible.
Right.
If we're all on the same page, then the math used to be 7 to 8 years.
Right.
Now, when I go do a change for somebody's deductible from 1% to 2%, they can recoup that difference in 2 to 3 years.
Much quicker.
Some of them are 4 to 5 years.
Yeah.
So we always do the math equation for them and we put it in front of them and say, hey, look, When was the last time you had a roof claim? I can tell you, you've been with me 10 years. It was 7 years ago on this policy, right? Yeah. So if every 7 years you have a claim and you save your deductible every 3 years, you tell me what the best thing to do is.
Yeah.
Right.
Yeah.
Now the other side of that is when the claim comes, you better have $7,000 in your pocket.
Yeah. Yeah. You got to have the money to be able to handle it.
So it's a double-edged sword.
Yeah.
We're going to get hit with hail at some point in Texas, right? Mm-hmm. Is it bad enough that makes you need a new roof? Maybe, maybe not.
Well, I was reading, so where this kind of kicked off for me a little bit is I was reading in several places about it, because they were saying obviously the percentage of increase, but some of the things they were attributing it to were, first off, they had a significant amount of weather events that have been ticking up for whatever you want to attribute that to, but they have been ticking up, and especially in places like Florida and
so I don't mean to cut you off. Let me kind of jump in on that real quick, because one thing happened for us in 2022. We had to renegotiate our what we call reinsurance. Okay. And most people don't understand what reinsurance is, but when we had the massive wildfire in Hawaii, do you think Allstate and Farmers and State Farm, do you think we paid all those claims?
No.
Heck no. We paid our portion, just like you do your deductible. Yeah. Right? Call it a deductible.
And then there's a bigger insurance.
We buy an insurance policy from the big guys.
Yeah.
Right. And so once we hit our, I don't know what you call it, 300 million, 200 million, whatever they set their limit at, then the reinsurance kicks in.
Yeah.
In 2022, the cost in Texas for reinsurance for Allstate went from 444 million to 1.2 billion for 1 year. So it tripled in a 1 year period.
Yes.
Right.
Yes.
So when our cost continues to go up, the cost of roofing, the cost of labor, the cost of everything continues to go up, and it just multiplies. Then
that gets passed on to the consumer.
It gets passed on the consumer. Yeah. 100%.
Yeah. No, that's that. Look, that's just the way it works, man. That's how, I mean, again, good or bad, that's how it works.
That's how it works.
Well, and that was the thing. It was talking about weather events, and it was saying that in 2023 that we had if they went back,
like talking about the number of storms.
Yeah. Like the average had been for years, maybe like 5.
I think we hit our number in August.
10. Yeah. It hadn't been much. And then in the way they established these events were anything over $1 billion is what they were looking at. Any damages that were incurred.
Catastrophe.
Yeah. It was like over $1 billion. And in 2021, there were 18, I think it said. And then in 2022, there were 25 that had occurred. And of course you had the wildfires in Hawaii in 2022. And then you had 2023. And then in 2022, you had the hurricane in Florida, which was like it was like the second most expensive, destructive event in the history of the country. It was like $65 billion. Yes. And that they say these weather events that keep causing, but it's not just because of the increased weather events, but it's also because the cost, like you said, right? The cost of everything has gone up.
It was completely different.
Right. Because of inflation, because inflation has driven the cost of everything up. So they were saying just a standard run of the mill, tornado event or hail event in the Midwest was now $1 billion event, because of how expensive everything has gotten.
Just look at Mansfield, right?
Yeah.
When I started in Mansfield 20 years ago, there were a bunch of cows around here.
Right.
Those cows aren't there anymore. They're rooftops.
Now,
right.
Yeah, thousands of homes.
If we have a hailstorm that came through Mansfield that hit a bunch of farmland, is now hitting rooftops.
Yeah.
It's costing us more.
Yeah.
Right.
Yeah.
And people don't talk about some of the semantics that, the growth is really what's.
Oh, no,
explosion.
No, absolutely. It was talking about how Florida specifically, because it was talking a lot about Florida, and that there had been an immigration over the last 5 years of like 950,000 people or something like that to Florida. And, again, you have more houses, you have more commercial buildings, you have more people, you have more things to insure. So when everybody's moving to a high weather, place that you're having hurricanes and floods and all kinds of stuff that's rushing through there, you're going to have more claims because it just costs more money to do that.
I count my blessings every day. I'm not an insurance agent in Florida or California.
Well, I mean, a lot of them
you think our
pulling out.
I was just say, you think our availability issue is bad here?
Yeah.
Go to California.
Yeah, it's really bad.
Go to Florida.
Yes.
The difference is in those two states is everything's so heavily regulated.
Yes.
When we go to take a rate increase, we have regulators,
right?
And the regulators are there to make sure our rates are justifiable, but also to protect the consumer.
Yeah.
Right.
Yeah.
And so they're between a rock and a hard place because we need 30% increase.
Yeah.
And the consumer's like, that's absurd. You can't give them 30% increase.
Yeah.
We're like, well, do you want them to stay in business? Do you want to have that same insurance company to be able to give you insurance?
Yeah.
And so it's a really tough situation. So you get New York, you get California, very, very, very heavily regulated. California knows they're in a problem, right?
Yes. Well, they just raised their taxes.
Their politicians know that insurance is becoming an availability issue, and it looks bad on them. Right. And so they are changing their stance towards the insurance company to be able to allow them to take some rate increases. And they've recently allowed some rate increases that are substantial rate increases that are necessary. But I personally think, unfortunately, the other parts of the United States are paying for some of those states that aren't allowing them to take the rates.
Absolutely. No, right? I mean, it's spread across everybody. It's not just hit that. 100%. I'm going to pull that mic a little bit closer because, like, I know you like putting things in your mouth. You're going to be fine. Like, just get a little closer. You're fine. But no, it's absolutely spread across everybody. I mean, that's just how it works. If you're a national, insurance company and you're doing business in 50 states, well, then if you take hits in certain states, you're going to bleed it across everybody else. That's just the nature of business. Again, good or bad, it's just how that shit works.
The good thing we have for us is Texas is such a big part of everything to every insurance company. Right. I think for Allstate, maybe 20% of the company comes from Texas. I mean, our premiums here are huge. Right. And so they're not going to pull out of a market that is too important to them.
Of course.
Right. They're going to figure it out. They're going to get with regulators. They're going to get with politicians. They're going to figure it out.
And we have a massive GDP just in the state of Texas. They're not
100%.
The big carriers aren't pulling out of here.
We can't reduce the cost, right? We can do everything we can to reduce the cost. And sometimes when you see claims, you think they're being chintzy. They're doing their job to try to keep the fraud. They're trying to keep and you want to talk about fraud. I mean, man, the liability claims on bodily injury, just go do a little research on that. Everybody talks about the car parts, the roof parts, this and that. Go look at medical liability claims.
Really?
Ever since COVID, all these traveling nurses, they make a lot of money now, right? And all that cost is bogging it down. And when that happens, every accident, I mean, go turn the radio on for 10 minutes and tell me how many lawyer commercials you get.
Yeah, there's
I guarantee you in 10 minutes, it's probably going to be 10.
Yes.
Right. Yes. And so they're all begging for the free dollar, right? And when you get hit, you're entitled to this, you're entitled to that, right? Well, in my world, the only thing I'm entitled to is get up and go to work.
Right.
And I'm lucky if I have that job, but that's up to me to keep it.
Yes.
Right.
Yes.
There's no entitlement in this world, but we're teaching everybody there's entitlement, and these attorneys are really, really bad right now. The liability part of it, I guarantee you, when you talk about inflation and you say that we peaked out at 9.45, whatever the percentage was, the insurance inflation 2 years in a row was over 30%. So 2022 and 2023, you're talking 30% inflation for insurance related issues. Where do you think your premiums are going to go? Right. There's nowhere else for them to go.
Well, and it does, and this is on a bigger thing, and I don't really want to go farther down rabbit hole on this one, but
we could get there real quick.
Yeah, right? I know. We have those private conversations on our own, but the and this isn't, an Allstate thing or a State Farm thing or insurance thing. This is any large company thing is, they're beholden to shareholders. And 100%. So therefore the thing that is not going to suffer is their profit. Their profit is not going to suffer. They're going to keep it up. And if they can get it higher and they can raise it, then they will, you know what I mean? And
well, look, we went 9 quarters with losses. Right. We understand losses. They're going to recoup those losses.
Yes,
right.
Yes, they are.
And so talking about the reserves, right? I mean, these big insurance companies went from billions of dollars. We lost tens of billions of dollars in reserves. Right. Which has caused this logjam of availability. And so I can't tell you how heartbreaking it is. I mean, I'm not joking. I mean, my staff goes to a beating every day.
Oh right? Yeah, I'm sure. Yeah, you guys get beat up because y'all are the boots on the ground that's having to deal with the customers that are pissed 100%. Because they're I mean, you told me the story about, old ladies that have called you and like they're on fixed incomes and they can't afford this kind of boost, and you're having to, I mean, what do you tell them? Like, because this is another thing that I don't think a lot of people understand fully is that, and I think it's the same everybody, but you can clarify for me. But Brad Bingham does not control the premiums that you pay for your Allstate insurance.
I got a magic wand in my pocket, buddy.
Right.
Don't you know I wait on my premium every day?
Yes. So you are just passing on and trying to explain what the company is providing. And this is the same. And
I'm an educator, Mike.
Yes. So talk a little bit about, just so everybody understands how this works, because I don't think everybody really fully gets it, and this is the same, I think, pretty much for everybody, for every insurance company that there is. It's not just Allstate, Farmers, Liberty Mutual, all of them. The powers that be from above send down your pricing. Here's what you can charge. The ivory tower speaks. And then you can now, and this is where you can really get into the weeds for me here, is the a la carte part, where now, because it used to be you'd get this and this is what you got and that was it. And now, because the cost has gotten so out of control and companies are trying to adjust for it, now they're pulling coverages out. Now they're taking things away to make the number look better, but you're losing coverage.
Agents are doing that,
right?
Not companies.
Well, that's what I mean. Agents, yeah.
They give you the options.
Right.
The agent, if you have a good agent, I'm going to tell you, being an agent 25 years, I think now is more important to have an agent than it's ever been.
Yes.
Right. Because you can navigate through this insurance rabbit hole all day long. Just this morning, I was going to be late this morning. I had a friend from school call me. His daughter goes to school with Aiden. And he calls me up. It's like, man, my wife shopped all day yesterday and they've got all my records wrong and they've got all this jacked up. And I was like, let me just run a quote for you. Right. Yeah. It took me 10 minutes. The stuff that all these people are telling him on his record are not on the record. And we write the policy for him in about 10 minutes. Right. And he's like, God, why don't we just call you yesterday? He goes, we went through all this. We sit down and Wendy goes, isn't Aiden's dad an insurance agent? Why don't we call him? And they were pulling their hair out, literally pulling their hair out.
Yeah.
And so it's rewarding to be able to help people.
Yeah.
Right. And right now we're saving people big money.
Yeah.
Right. I mean, it's not 20, 30, 40 bucks. I mean, sometimes it's $200-300 a month.
Oh no. I've sent you multiple people that I've gotten quotes from other places, and I get the number and I'm still adjusting myself to quoting this stuff.
Me too.
To try. And I'm not quoting insurance, but I'm just trying to give them a ballpark on what it's going to cost.
You have to, that's part of your job.
Yeah. Yeah. And my ballpark is way off these days. I've had to correct that. But then I send them over to you, and it's $1,500, $2,000 less in many cases. I mean, we had one recently where the client, I guess they had a claim, or there was a perception of a claim that the property it had, that's a new thing, right? Where now if you're buying a house and that house has had claims on it previously, as the new owner, you can be held to the insurance on that. In certain companies, at least.
Certain companies.
Yes.
Certain companies. Yes.
Yeah.
They can set whatever guideline they want.
Yeah.
And yes, that does happen.
Yeah. That blew my mind. Like, I couldn't believe that this particular company.
I don't want to say it blows my mind because it could happen to me tomorrow, but right now it doesn't.
Yes. Right now you don't have to deal with it, but it doesn't mean you won't in the future.
That's correct.
But anyway, going back to how to look at coverages. So explain how they used to do it versus what's happening now more and more in the industry with the a la carte method and how they're breaking it down.
It's not a ton different.
Okay.
When we sell a policy in my office, we sell what we would buy.
Okay.
Right. So when we're doing a quote, we're putting on there what we would buy.
Right.
Right. Now, when we go through the quote with the customer, I tell them, look, this is what we put on here because this is what we would purchase, but it's your choice whether you want it or not.
Gotcha.
So if you want to take off the sewer backup, which is $90 a year for the best coverage, take your $90 off a year. Right. If you need it, I'm going to document. You told me to take it off.
Yes.
Right. We had this conversation.
Yes.
But I'll take it off for you.
Yeah.
We'll save you the $90.
Yeah.
Okay.
Yeah.
So yes, we do have control over those types of things, but your policies are going to come with a dwelling coverage, a structure coverage, your contents coverage. You can get replacement cost or non-replacement cost. If you get non-replacement cost, if it's not more expensive substantially, buy replacement cost.
Explain what replacement and non-replacement cost is.
Replacement cost is very simple. You buy a TV today, 5 years down the road, it was $2,000 when you bought it. Now it's worth $200.
Okay.
Right. Actual cash value policy, which is not replacement cost, is going to pay you $200. Replacement cost is going to pay you $3,000 if it costs $3,000 to go replace that same TV
to buy today.
That's correct. So buying new, buying used.
Right. Gotcha. Okay.
So if I see these policies come across my desk all the time, and your structure, your roof substantially needs to have replacement cost, right?
Yes.
If you put a 2% deductible on non-replacement cost, you're not covering your roof.
Yes.
And the insurance company would love you.
Yes.
Right. Because 65 to 70% of your rate is for your roof.
Yeah.
So if I can exclude that out of your situation here,
don't you got like a silent mode on that thing? Those guys blowing up all over the place.
My bad. And so, replacement cost is super important.
Yeah.
Right. And when it comes to contents, if you don't have it, you have a claim, a $50,000 claim can become a $10,000 claim very quickly because they will depreciate it.
Right.
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 And so when you're saving $89 a year, don't take the $89.
Right.
Buy it.
Right. Well, it goes back into the whole thing that was always the case where if it sounds too good to be true and it's significantly cheaper, it is. I mean, again, we had another client who had gone with another company or looked at them, and we had reviewed the policy, and you realized on the roof, which blew my mind, that they didn't have the replacement costs for the roof, which is why the premium was so much cheaper. And you had tried to explain the client, and I can't remember. Did they end up going? I think they ended up staying.
I can't even remember.
I can't remember because the
There's
price.
So many, Mike.
Yes, I know the cost is so much less, but that's the type of stuff, and that's where the agent part comes back into such a big play because. And I tell this to anybody that I work with, and when we talk about insurance, because I talk about it all the time, is if you're going to do your car, I guess I still don't agree with it, but if you're going to do the Geicos and the 1-800 of the world, the Progressives, fine, just whatever. It's your car.
Mike, I shaved for you last night. I trimmed the beard down because I didn't want to come here and look like the caveman.
I know. So I don't agree with it, but fine if that's what you need to do. But when it comes to your house, you have to have an agent because there's so many moving parts to it. And those business models are built. So the 1-800 callers are built to make it complicated. They want to make it very difficult for you to make a claim. They want you to have to talk to 10 people. They want you to have to remember 6 different numbers that you're going to have to give them every single time.
I think you're wrong. I think they want to make it simple, but they don't want to give you coverage.
Okay.
Right.
Okay.
So they'll get you on the hook with that 2% deductible or non-replacement cost. And then you'll come in the agent's office and we'll go through the policy with you. And like, do you know what you bought? And they're like, not really. And I'm like, they didn't go over your coverages with you? And they're like, well, no, they just told me what my price was.
Yeah.
And I'm like, well, they didn't give you this and they didn't give you that. And if you have a roof claim, it's $9,000 out of your pocket. They're like, no, we never discussed that. I'm like, I don't know how these people sleep at night.
Yeah.
Right.
Yeah.
I take my melatonin. I sleep pretty good at night. Right. But it amazes me when I see this stuff. And unfortunately, we are creatures of me. And if I can pay my bills today off of your ignorance, then a lot of people will do that.
Happens that way often.
I tell people all the time, I'm like, look, I'm not for you. Maybe this is the right person for you.
Yeah.
Right. Because I might know.
Yeah.
And so it's been frustrating the last 2 years. I've pulled a lot of hair out. I've got a lot of gray hair. I feel really bad for my staff. Because they take the beating every day. And then they got to put a smile on and sell the next customer. It makes it very difficult, but they do a very good job. Right. They're very educated. Having a staff having an agent to you that's not educated is no good to you. Right. They're just another salesperson. Right. If they can educate you, fantastic. But if you can't get educated from your insurance agent, you need one that'll take the time, first of all. Right. And when it comes time for a claim, I tell people all the time, call me first. Right. With a $9,000 deductible. If we got $2,000 worth of repairs, don't file that claim because it stays on your record forever.
Because once you file it, you're
it ain't going nowhere. Right. So I don't think that the policies have really been cut down. I think the agents are starting to say, hey, I'll take this coverage off because it's cheaper. And people are just looking for cheaper right now.
Yeah. Everybody is. Everything's getting more. I mean, look, according to the news, the economy's doing great. Like we're all billionaires and the stock market's through the roof and like crypto's going bananas. But yet it seems like the general person seems to be struggling a little bit. But yes, everybody is trying to cut costs. They are trying to minimize things as much as possible. But again, what you guys do that a lot of companies don't do is it goes back to the education piece, because I mean, I tell people and agents that I work with all the time, like, we do this job every single day. People buy houses 3 or 4 times in their life, right? So when they go through this process, it's not something that they've gone through many, many times before. So you have to re-educate them the entire time because there's a lot of uncertainty and a lot of stress involved with it. But it's a big transaction, and people, when I talk to them, are generally willing to listen because this is a big deal, right? It's harder for you and your staff because, look, I hate insurance. As far as I'm concerned, it's just like if Susan ever comes to talk to me.
I hate insurance.
If she ever wants to talk, I'm like, I don't care. Just do whatever. It's just, So but y'all do a great job of walking through stuff with the clients and making sure that they understand every piece that's covered and why, because if you don't understand it, and I guess the good thing is you don't need to understand it every single day of your life. You just need to understand it when these premiums are coming up and renewing. But you got to ask questions. And unfortunately, the common consumer is more interested in cat videos on TikTok than they are about finding out, what kind of coverage they are protected against, so they don't lose their ass, in 6 months when they get a hailstorm.
Saved $100.
They saved $100 a month, but it's that, it's that short-term gain kind of a thing, or that you don't feel the long-term hit. So, But y'all do a great job of explaining that to people and walking them through it, which when you go to the non-agent models, when you're dealing with the 1-800 folks, they're not going to do that. And more often than not, you know,
if you don't ask the question, they ain't answering it.
No. And they're paying their call center guy, you know, $10 an hour, and they have a script in front of them and they're answering the questions.
He doesn't have a license.
He has no license.
He falls under the mothership license.
He's been doing it for about 6 months, maybe, you know, until he
may be at home in his underwear.
Right. Yeah, probably. But that's where it comes to a point where you have to make sure that when this is it can be such a big impactful thing. And unfortunately,
hopefully it's not.
What is it? What are y'all saying? Nobody cares about insurance until you need it, or what is that?
Like a lawyer.
Yeah. It's like nobody cares about it until it happens and you have to get it. But it's important. So, all right. So let's specifically talking about real estate. If you were talking to realtors, and I know you work with a lot of agents here in the area as well, but what would you tell agents today? Because here's the problem that we're running into that we see more and more and more. And I know this, so I mitigate a lot of this up front, but I hear horror stories now, and they're coming up more often. Is somebody finds a house, right? And when I qualify somebody for a mortgage, more often than not, you know, not all the time, but they're close on their numbers on what they can qualify for. Because if I tell them they can get this, they want to go get that, right? So we're tight on numbers sometimes, and we're trying to keep our payment within a range because that's what we qualify them on, as a payment, not a purchase price. And into the payment goes their principal and interest, it goes their taxes, it goes their insurance, it goes their mortgage insurance. Well, I know the mortgage insurance because it's easy to figure out. Once we pick the house, I know the taxes. It's very easy to figure out. And once we know what their terms of their loan are, that's really easy to figure out. So those three components.
But you're throwing a dart in the dark at the insurance price right now.
100%. 100%. Like, and
there's no more calculation. You can just say,
no,
put this calculation in there and come
no. And especially because credit plays such a big role, and even former claims now that I have no knowledge of. There's no way that I could possibly know.
It may not even be your claim.
Yeah. It may not have anything to do with them that's going to hit this. So I'm running into like, okay. And I've heard people call me and say, I was fine. I was qualified. Everything worked out. I went to go get my insurance on this house, and it was
$7,000 a year.
It was $200 more a month than they had told me. And now I don't qualify for the house. What am I going to do? So have you run into this, and what are you telling agents to like
every day?
Okay. So what's your guidance to the realtor crew out there on what to do about this?
Well, so when this all kind of started, I've got my network of people, and I picked up the phone and called them. And I told them, I'm like, look, first thing you do when you get a property is, you know, you're pre-qualified. You know that.
Yeah.
Pick up the phone and get an insurance quote.
Yeah.
That day.
Immediately. Don't wait till the last minute.
Don't get outside your option period.
They'll wait. Conrad wants to know where we got all the gray hair. Look, I just have gray hair here. I'm beautiful and pristine up on the top.
That's funny. You got kids. You'll be there one day.
Oh yeah. He's got them. They're showing up on him. It just shows up in different spots.
He's a jokester.
Yes, he is.
You distracted me.
Sorry. So you're talking to realtors about getting that quote right away.
Get it right away. Ask the questions. Do you see any claims on the property? Do you see any insurability issues? Have the roof inspected. We've talked about this with Cody and Eric all the time.
Yeah.
Have the roof inspected, right? If you're if you're a realtor, do the due diligence for your customers.
On the listing side.
Either way.
Yeah.
Buyers listing, I don't care.
Yeah.
If you list a property, have a roofer come out, get them a report.
It's free. They don't usually charge you. Yeah.
100%.
Yeah.
And any roofer's going to jump to go do it for you.
Yes.
But as a buyer as well.
Yeah.
First thing you do, do your inspections, but send a roofer, not an inspector.
Yeah.
Right. Because the roofers are going to tell you a little bit different. An inspector is going to tell you, is the roof functioning?
Yes.
Right. When it rains, does the water shed?
Right.
And that's pretty much every roof.
Right.
Right. But a roofer is going to get up there and say, do you have prior damage? Right. A new roof is always going to be cheaper for you to insure because it's less risk.
Right.
If I have a brand new roof compared to a 10-year-old roof, we get a marble size storm, a brand new roof's going to live through that storm. A 10-year-old storm could beat that up.
Yeah.
The premium's going to align with the risk. You got a higher risk, we're going to pay a higher premium. So if there is damage there, work with the buyers and the sellers, make it a collaborative event, and educate the people, right? We're not doing this because we hate you and we want you to put a roof on, right? There's reasons for this, but find your home, right? Let's get your home under contract. Let's get your insurance taken care of. Then we can handle it all in the background after everybody's run records and we have less claims, blah, blah, blah.
Right.
There's not an insurance company out there that doesn't want a brand new roof.
Right.
Okay.
Yeah.
So if you can just communicate really well with the other agent Everybody knows the same situation we're in here. Let's work for a common goal here. You know what? Educate your consumer what a 2% deductible is.
Yeah.
Right. And if they're okay with a 2% deductible, I hate to say that I'm okay with it, but if the math makes sense
nowadays,
I raised my deductible, right? I did the math and it made sense to me, right? I can afford it when it comes time. I don't want to afford it, but I can.
Right.
So to me, if you just get back to the education part of it, right, is we as an insurance agent, as a realtor these days, there's a lot more to educate people about.
Yes.
There really is.
Well, now they're paying attention because the cost is so much different too.
100%.
Yes.
100%.
Well, and even on the seller side, you know, when you're listing a home, if you get the roof checked out and you get it inspected, you know, as an agent, I guess you could say, well, I'm opening a can of worms if now this roof isn't going to be insurable and my client's going to have to make a claim.
I 100% get it.
That's what they say. 100%. But what you don't understand is that it's going to come up either way. If the roof is bad enough, when you either in the inspection
you want to sell the house one time or you want to sell the house 5 times.
Exactly. So it's like, those are hard conversations. And those are things that you have to talk to your seller about and say, hey, look, this is something we need to do.
The good realtors have the hard conversations.
Yes. And it makes it a challenge. But if you have that conversation, it takes all the stress out of everything going forward. And on the buyer side, if you're not getting the roof looked at ahead of time and you're not getting it inspected before you get out of your option period, then when you go to try to get insurance on that house, either A, your premium can be through the roof because no pun intended, because because the roof's so bad, or are they still doing they come out a month later after you close and then they're like, oh yeah, you're not insurable. Is that still happening as well? So explain that.
I mean, every insurance company's going to inspect what they write.
Right.
And so inspections used to happen before closing. And so we would know before closing.
Yeah.
Well, the guidelines for underwriting in Texas, I think, is 90 days. So an underwriting period starts when the policy starts. 90 days, you have an underwriting period. As long as you inspect within that 90-day period, if it doesn't pass inspection, you can get off the risk. Once you pass that 90-day period, you're on the risk, right? If they don't pay their premium or you come back out on a new inspection and they got some issues on a different inspection, you could non-renew for those types of things. But once you're on that risk for 90 days, you're on it. Right. So that inspection happens in 90 days. We got a bad roof. We got some rotten siding. We got some, whatever, the broken window, whatever the issue is, the insurance company comes back and says, until this issue is fixed, we're not going to insure the property. Right. So they give you a time frame.
Yeah.
Now what we're seeing a lot with a lot of these carriers are trees. Trees are becoming a large issue.
Really?
And so I'm sure some of your realtors, if they watch this, they'll come across this or they've been across this, like, man, I know what he's talking about. So some of these insurance companies, if you have trees that overhang the roof, ain't going to write you a policy.
Really?
Stupidest thing I've ever heard of.
Okay.
Right.
So you haven't come to look at my house yet, have you?
All states not this way.
Okay, great.
All states not this way. Now, if the trees are rubbing the roof, different story.
Yeah.
Right. But if it's overhanging the roof line, some of these insurance companies are getting off the risk. And it's absolutely ludicrous.
Really?
Right. There's another, for people that can't get insurance, there is a safe place.
Okay.
Right? It's called the Texas Fair Plan. Right. We haven't written the Texas Fair Plan. Mold crisis, we wrote a lot of Texas Fair Plan because of some availability issues like we're having now. But one of my staff, Joanne, was talking to the Texas Fair Plan the other day because she was doing a quote. The coverage is not as good as a normal policy, but they will give you coverage so you can get closed if you want to buy that house. She's talking to the Fair Plan lady, and she's like, man, we've never been this busy. We're writing hundreds of thousands of policies. We've never written this many policies, and it's because there's no availability. They have gone up and up and up on rates. Coverage is not what it is on a normal homeowner policy, but they're just throwing them on the books right now.
Right.
Because if you've got 2 or 3 claims, you don't have an option.
Right.
It's the Fair Plan.
Yeah.
So we'll stick you with a Fair Plan. We will mark you for when those guidelines change to call you, or if your guideline, or let's say your claim was 3 years and now it's 5 years, we can write you. We'll move you away from the Fair Plan over to an all-state policy, but that's our only fail safe right now.
Did you say the Fair Plan is a national thing?
It's a state.
It's a state
thing.
For Texas
Fair Plan.
Well, I know that there were, and I'd seen that in the article I read too, that there were, like, Florida had a state option and they were coming up with these. But I mean, I'm assuming that those are more expensive.
Not necessarily, because the coverage isn't as good.
Coverage is not good. Okay. So you're just paying more out of pocket if you have.
You're probably paying the same for less coverage.
Gotcha.
Right.
Okay. But it's something.
It's something.
It's something that
it will get you closed on the house.
Right. That's not nothing, but the expense is still there. So, All right. So if you have a seller, get the roof inspected. If you are a buyer, get the roof inspected, because all of this stuff is going to impact your premiums. Now, are there certain coverages when you're looking at any kind of, insurance costs, especially as it relates to a house? Are there things that you absolutely have to have? Are there things that you really don't need, maybe, or extra, that fluff that people throw in there? It's like
what you have to have is what the mortgage company tells you have to have.
Okay.
Right. Wind and hail.
Yeah.
Usually not more than 2%. Some of them let you go up to 5%. Depends on the borrower.
Yeah.
I guess.
They've actually loosened the restrictions on that quite a bit.
Okay, good.
They'll let you go pretty high. Now, they'll let you go higher on deductibles if you can prove you have reserves. So if you have money in the bank that you can cover the coverage, then you can do it. Yeah.
And so I got lost again.
Just to like the types of specific types of coverages.
So as long as the lender is okay with it, there's no things you have to have. Right.
Okay.
All policies are going to come with a dwelling coverage.
Yeah.
They're going to come with other structure coverage. If you take the other structure coverage off, it doesn't save you any money.
Well, right? Okay. Instead of have to have, I'm really more asking, like, from Brad's point of view, what do you need?
Oh goodness.
What do you not want to not have?
Water damage.
Okay.
Right. You want wind and hail.
Yep.
Obviously. You want replacement cost.
Yep.
You want water damage. You want.
And what does water damage cover, really? Because does it cover pipe bursting in your house?
100%.
Okay.
Yep.
Is there something that it doesn't cover? I guess it's not flood.
Depends on what you consider water, right?
Okay.
You got different levels of water. You've got some policies that have water full 100% coverage. Some of them limit to 5,000, 25,000. They'll put a limit on your water coverage.
The amount of money.
Money. Most all policies cover a sudden and accidental discharge of water. A pipe breaks, your hot water heater bust, the line comes out.
Sudden and accidental discharge of water.
That is the term from the policy.
Okay.
Then you have policies that don't cover what they call a seepage and leakage. It's been seeping for a period of time. I don't know about it.
Yeah.
Not covered.
Right.
It's not sudden and accidental. There are companies that have endorsements for that. If it's affordable, buy it. Right. If it's not available, you can't get it. Right. But then you've got your let's call it drain water issues. Okay. Most of your drain water issues are typically not covered. Your pipe bust under your house because it's a drain and it wore out over time.
Okay.
It collapses. That's typically not covered.
Okay.
Right. But if you have a supply line that comes to the house, you get a slab leak. We have to go below the slab to fix that. Most policies cover that. Some policies don't cover that. Right.
Okay.
So foundation coverage can be important. Most of the time they reroute those issues now. Instead of busting foundations, it's a lot less expensive to fix those issues now. But when the insurance company had an open pocketbook for them, it used to cost $15,000-$20,000.
Wow.
Right. Now you can get it fixed for $2,000 to $3,000.
Oh, so things are getting cheaper in some places.
No, it's just there's no coverage for it.
Right.
So the insurance is not paying.
Yeah, the insurance isn't paying.
And so foundation coverage, if you can get it, if it's affordable, get it. And then as far as sewer backup coverage, you see that on policies. It's part of water damage coverage, but it originates off of your property from a sewer line. The city line backs up into your house. And it can happen. It's not fun. It's nasty.
Yeah.
Right.
Oh, yeah. Nobody wants sewage in their home.
No.
Yeah.
And so some of the policies cover that. Some of them don't. We have an endorsement we put on every one of our policies. If you don't want it on there, I told you earlier, it's $90. Take it off if you don't want it.
Yeah.
I put it on there for $90. I offer it to you.
Yeah.
Right.
Yeah.
So other than that, I mean, all your policies are going to cover your fire and your theft and the normal basic perils that your policy comes with.
Yeah.
So you're buying a homeowner policy in Texas. There's no magic piece of coverage that you really want. You just want your roof covered. You want it with replacement costs. If you're willing to take a 2 or 3% deductible, that's your business, right? If you can afford it and you're okay with saving the premium on your insurance, save the money.
Yeah. Well, and especially
if
you understand, if they explained it to you, if you're aware of what they're telling you to do. Are you seeing any, shady is the wrong word, but are you seeing any?
100%.
Okay. What are you seeing
the deductible?
The deductible.
Yeah.
Okay.
I mean, we will talk to people. We'll do a quote. I mean, it amazes me. We'll do a quote for a customer and we'll pull them up in the system. They've gotten 5 Allstate quotes today.
Yeah.
Right. And I'm like, folks, if you buy the same coverage and the agents do the things the right way, the same way,
it's all the same
price is the same.
Yes.
Right. So don't waste your time calling 10 agents, but the people that do, and they'll find an agent that puts an age roof as a 2022 or 2023 when it's a 10-year-old roof.
Yeah.
They're going to save them some money. And so there are those agents out there that will do that.
Okay.
We do quotes all the time. The other staff gets into our quote. They change our stuff, change our age of roof.
Even within the company, they're getting
oh man, some of our biggest competition is within the company.
That's crazy.
That's crazy. And then they go to a 2% deductible and they don't even have a conversation. They're just cheaper.
Yeah.
Right.
Because that's
they
what they want to
wave
see.
Their magic wand, and here we are. We're cheaper.
Hey, look, I experience it myself. They that's just what they see, and that's what they like. They like
That's
less
right.
money.
That's right. So right now, for my staff, it's really frustrating because they do a quote. They work very hard. They work on commission, right? Not straight commission, but that's part of their compensation, part of it, right? And so they do a really good job of educating and selling a customer. They call another agent. They change our stuff. They tell them we did it wrong, and all they did was change the age of roof or put a 2% deductible. And so we call those customers back and we tell them, hey, are you aware you bought a 2% deductible? And you would be shocked how many say, we didn't even discuss deductible.
They're like, what is it? What do you mean? What's a deductible? What's a deductible?
Well, don't you pay the deductible? No, sir. No, sir. That's your responsibility. And so that makes it very frustrating, especially for my staff.
Yeah.
You know, we lose business over somebody else being cheaper because they're not doing the right coverage. I tell them, do it the right way, sleep good at night, take care of your customer.
Yeah. Well, and again, if you're explaining it to them and you're showing them and you're telling them why they need it and all that kind of stuff. And that's where, I mean, I experienced that on my business too. It's like, if you walk through everything with them, then at least when they're going to shop you to talk to somebody else, they're going to ask the right questions. You know, if you're telling them this stuff, they're going to say, okay, what's my deductible? Do I have this coverage?
Mike, I love working with lenders like you, because when you send it over to me, right, and the quote on the homeowners is $250, right, and their competition is quoting them $100 a month, they're like, I'll tell them, I'm like, so why don't you call that guy back and ask him where he's going to get that $100 a month insurance at?
Yeah.
Right. He goes, well, we could do a 5% deductible. I'm like, well, can you afford a 5% deductible?
Yes.
Right.
Yeah, you want to
so
pay that much
when
out.
you set the expectations for us legitimately, it makes everything easier. But when they got to go explain a $250, my insurance is $350, I quoted you $100. How do you get yourself out of that?
Yeah, well, I'm not quoting 250 anymore. Now I'm like at 300 these days. It's like blowing my mind. It's like, oh my gosh, you know, it's, and that, like, it used to, I would say, oh, your insurance. Now I'm like, look, my conversation used to be, you know, insurance is going to fluctuate depending on the carrier you use, but it's not going to fluctuate much, maybe $25, $30, you know, not dramatically, but use whoever you want, whoever you feel comfortable with, blah, 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 blah. But now I'm like, look, I don't know. Here's about what I think it's going to be, but you could have claims. The house could have claims depending on the carrier you're providing. The one thing, and this is the thing I'm telling them now, I'm like, the one thing I will tell you that you need to do is, whoever you pick for insurance, make sure that they explain everything that they're covering and what they're doing for you. And if they don't, then run away as fast as possible and talk to somebody else.
It's good advice,
because it's just
have that hard conversation.
Man, there's so many moving parts now that it's just unbelievable. So on a consumer side of things, what, you know, obviously credit. So you talk a little bit about that, but things of that nature. What can an individual do to make sure that they're
have a relationship with your agent?
Okay.
That's what you can do as a consumer, because most of them, they look at us as a commodity.
Right.
They really do.
Yeah.
Right. And I like to know,
like, call you and have a beer, or
they're welcome to, right? I have coffee at the house. I have coffee at the office. My door's open all the time. I'm at the office most of the time.
Yeah.
Right.
Yeah.
Yes. Why not?
Yeah.
Right. Why not know who you do business with?
Yeah.
Right.
Yeah.
I had a guy that was having a roof claim the other day. He was having some difficulties with it. I went out to his house. I sat down in the living room with him while the adjuster did his thing. And he looked at me and was like, Brad, I've never had service like this.
Yeah.
Right. I can't do that for every customer if you're down in South Texas, but if you're local and I can help you, I'm going to help you. Right. Yeah. Have an agent that you have a relationship with. If the agent knows you, they're going to want to go above and beyond to help you out.
Yeah.
Right.
Yeah.
And they do everything they can to connect with you. If you don't connect back, it's on you.
Yeah.
Right. Yeah. And so have a lot of customers that have great relationships with me. They don't want to deal with my staff.
Yeah.
Right. That's a problem, because I have very, very, very good staff.
Yes.
Right. I pay them very well for what they do.
Yeah.
And they're fantastic at it.
But they want to call you.
But they want to call me. And I'm okay with that.
That's
right.
fine.
I've got my cell phone on me. You know that.
Yep.
They call me. We have conversations. And Joanne or Courtney or one of the girls is like, Brad, they just want to talk to you. And I'm like, I'm okay with that.
That's fine.
Just get a number. I'll call them back.
Yes.
Right. So just have a relationship. And when things do change, I tell my girls all the time, they just want to know why.
Yeah.
Right. It is our job. Things have changed. We know why. They don't know why. Let's explain to them why. So just like what we're talking about here today, have these conversations, and our conversations have gone from on renewals from, 2, 3, 4 minutes, taking the payment, doing this, doing that,
half an hour,
45
minutes.
No,
yeah.
I mean, you just look at the timeline, you've been on the phone, like, goodness gracious. But when you get done, they're appreciative, right? They get it. They understand, and they may shop you, but they may not shop you.
Yeah.
Right. And if they shop you and they're not saving $200, $300, $400, they're going to be like, Brad's worth every penny of that.
Yeah.
You know?
Yeah.
And so as a consumer, to me, just knowing your insurance agent, having a relationship with them, I got customers that drop by and bring us cookies and brownies and it's just because they enjoy when they pick up the phone and call us and they're having an issue, we can make that go away for them.
Yeah. Yeah. Well, obviously having better credit gives you a better premium in most cases. When you were talking earlier about making claims, right? And everybody, well, I have insurance, I want to make a claim. It's like, well, hang on. Like, let's figure out first how much that claim is going to cost you.
Goes
versus
back to having that relationship. Man. If you have a claim, pick up the phone, you call your agent, say, this is what I got going on. What is my coverage?
Yeah.
Right. And we're not adjusters. We can't tell you you're covered for this, you're covered for that. We can't tell you have coverage for a claim, but we can tell you what your perils your policy covers. So we can determine if it's possibly likely it's covered or it's not likely covered. If it's not likely covered, don't file it. Right. Then we can go over your deductible. We can figure out how much damage you got. You don't have to file a claim right now.
Yeah.
Right. You can file it tomorrow. You can file it a week from now. Do your due diligence to make sure the claim is worth it to you financially, because if you have certain types of claims on your policy, you're going to lose a claim-free discount. Right. So there's an impact to your policy plus your deductible. If your impact is $6,000 and it costs you $5,200 to fix it yourself, I'm going to advise you to fix it yourself.
Yeah.
You can do whatever you want.
Yeah.
You can file that claim.
Yeah.
But you're going to save yourself $800 over a 3, 4, 5 year period. What do you want to do?
Right. Well, okay. So you said
and that's why the credit situation comes into a big factor.
Okay.
What they're predicting when they use credit is not your credit worthiness.
Right.
They're looking at your claim potential.
Okay.
Yes. So if I have a $6,000 claim or a $5,200 claim, and my immediate out of pocket is $3,000, but over the 5 year period, it's going to be $6,000. Somebody in a financial need is going to file that claim.
Right.
Somebody who's not in a financial situation or need is going to probably pay that out of pocket if they take advice, if they understand things, if they're educated.
Gotcha.
That's what the credit score comes down to.
Okay. I
right?
got you.
It's not, are you good? Is your credit good? Is your credit bad? It's, are you going to file a claim?
Are you going to file a claim? Do you have financial hardship?
Predict that.
Yeah. Well, I mean, you get enough data with stuff, they can predict things pretty 100%. Darn accurately 100%. Now. That's crazy. Is there, I mean, you know, we talked about insurance costs are not going to keep going up, hopefully, if after these reserves are put in, but if more weather stuff,
we got a lot of reserves to build back, buddy.
Yeah. There's a little while. But is there anything else that's coming on the horizon that you know that'll ease some of this, or is it? Man,
what I think is going to happen, and it's already happening. You know, I've got family that's independent agents, so I know what's happening in the independent world.
Yeah,
they don't have anybody to write insurance through right now.
Yeah.
Right. They got about 2 or 3 carriers that they can write insurance through. If they got trees over the roof, ain't happening, buddy.
Mm-hmm.
Right. Mm-hmm. And so what is happening is, instead of giving the customer the option to raise deductibles, Farmers is renewing their customers at 1.5% deductibles. Automatically.
There's no option. Yeah.
Travelers, new business is 2% deductible now. Right. Automatically. Right. And so when these people are shopping their insurance and they're not having the conversation, you have a $4,000 higher deductible, but you're saving $400.
Or actually, it only went up $50. It didn't go up $400.
Right.
Yeah. Right. That's really what it is. Right. Yeah.
And these companies are real. When they have a big rate increase, they'll raise deductibles in their renewal. And so typically, if you raise your deductible, your price would go down considerably. Right. But when you get your renewal and your price went up $200 with a higher deductible, you're like, oh, $200 isn't bad, but now I got a $7,000 roof deductible, right?
But they don't usually know.
They don't look at the paperwork, right?
I'd never look at it.
When you file the claim and the roofer comes out and the roofers look at your stuff, he goes, you know, you got a $7,000 deductible, and they're like, what's a deductible?
If there's one thing that I would recommend to everybody is have a Brad in your life, because if you're like me, who's NID, my father-in-law's favorite 3-letter word, which is not in the details. Insurance is certainly one of those things that you need a Brad in your life to pick up the phone and go, what is this? I don't understand this. Can you explain it to me? Because, you know, Brad's a nerd when it comes to insurance, and he dives.
I'm just experienced. Mike.
Yes. What is Conrad says? There's too much paperwork. Our policy is like 99 pages. I know, man. It's too much. It's just a lot, man.
You're not an attorney. Don't try to read it.
No, it's not. But again, goes back to the importance of having a good relationship, which is why the agent model is so much more beneficial for you. And again, I think it was it goes back to when everything was cheaper, right? And you know, there was 50 different carriers and everybody had options and whatever else it was. You know, you could probably get away with just having a cursory situation and not really paying that much attention to it, just renewing because you could go to somebody else, give you a cheaper deal, and they're all the same. But now I think it's even more critical because there's been so many changes and the cost has gone up so much. And the impact of when you make a claim now is going to be significant going forward, that if you don't have somebody that you can pick up the phone to and sift through all the bullshit and the minutia of what it is, which insurance is absolutely that, then you're putting yourself at a disadvantage. And I don't think that, you know, I have my wife that handles this stuff and I have a Brad. So I don't have to worry about it as much. But just seeing the costs every day of dealing with my clients and seeing what they are running across when they're trying to purchase these homes. I mean, look, a $400,000 house.
It's not small, man. It's big.
A $400,000 house, insurance premium now, it's gone up. It's almost $300 a month. You know, and that's for somebody with pretty good credit, with, you know, a good situation overall, which 24 months ago was $200. I was confident. I would tell people, if you're buying a house between 200 and 450, your insurance premium is going to be about $200 a month. Like, I have a script in my head. Could be 215, could be 220, but it's not going to be 500 and it's not going to be 50 unless it's a brand new roof. And now I'm like, I don't fucking know. I mean, I have no idea. It could be,
Mike, I don't know.
Gosh,
I don't know until I run the numbers.
Gosh,
we look at them and I'm like, God, I hadn't seen a premium like that in a long time. That's a pretty good premium. And then there's some are like, how in the hell are these people affording this?
Yes.
It's crazy.
And you find the little things that, you know, you're like, oh, this is why, you know, I mean, you've pointed out a few of those to me when I've sent people over to you. It's like, this person had this particular claim, and, or this, again, the reason that price on this premium was so expensive with the other companies because there was a claim on the home. And I'm like, that blew my mind, because you can't control it as an individual on the weather. Like, how are you supposed? But we're being penalized now.
They don't care, Mike.
I know they don't care.
They can right now.
They don't care. They don't care.
They don't care.
Yeah, because and it's, you know, the bad part about it is that when there is less competition, when there's less people in the market that are being able to offer a particular service, then costs are going to go up. And
that's
prices,
what happened with reinsurance too.
Yeah.
You know, when we went from 444 million to 1.2 billion, we lost carriers out of Texas that weren't doing reinsurance in Texas.
Yeah.
We talked a little bit earlier about what caused a little bit. I don't want to get into politics, and it's not political, but I think a lot of this stuff. No, I know. This is just me being me.
This is we have these conversations all the time.
I dig into this stuff. I'm like, where's this stuff coming from?
Yeah.
And I think a lot of this world now is run on speculation.
Yeah.
Right.
Oh, everything's emotion and speculation.
Yeah. 100%. And so we were talking earlier, you know, like the last few years we've had really bad storms. Well, you know what? If you go back over 100 years, I guarantee you can find 3 to 5 year periods that we had really bad storms.
Sure.
Right.
Yeah.
And we had really bad loss years.
Yeah.
And so when you watch some of these articles or read some of these articles, you watch some of the news articles that they put out. I try to watch them all. I try to read them all. So I just want to see what's being said out there, right?
Sure. What you should. You got to know what's going on.
Global warming is, to me, a speculation.
Yeah.
And it's what's driving a lot of these premiums.
Yeah.
Catastrophe type stuff.
Yeah. I mean, even the global warming term, it's more climate change, but it's certainly, there is a narrative that's out there that's pushing for the idea that this is being caused. And that's, here's what is
maybe
going
it
on.
is, maybe it isn't. I don't know.
My opinion on it, and from what I've seen, is that there is certainly a change occurring. I don't think there's anybody that would argue that there is changes occurring. Now, whether it's cyclical by the nature of the planet, whether it has something to do with things that are out of control, or whether it has to do with human induced, causes, that's the part that is left up with a lot of conjecture, and nobody really knows. That's the bottom line, is that nobody really has an answer to that question.
If they just did, it wouldn't be speculation.
Yeah, no, that's why it's changing. But there is certainly, the climate is certainly adjusting, and it's affecting certain parts of it. What's really happening, I mean, it is getting warmer, but now we have more trees and more, it's greener than it's been in a very, very long time. So in a lot of ways, it's a benefit. It just affects certain parts of the country and certain parts of the globe more so than others because of these weather events that are changing. And anytime you're going through some kind of, whether
specifically it be coastal areas with
yes,
the hot heat of the water and that
yeah,
kind of stuff.
whether it be natural occurring or whether it be human induced, which I still don't know that it's we certainly play a role.
We're not going to figure that out today.
Yeah. Well, I'm saying we certainly play a role, but I'm going
to go get in my car. I'm going to drive home.
I know. I don't think it's really, I mean, well, that's like, I drive a Tesla and they're like, oh, you're an environmental guy. I'm like, no, I like it because it's like driving a spaceship. But, if you look at what it takes to get a battery out of the planet, it's pretty, it's pretty unenvironmentally friendly, just like driving a car. So, there's no good solution for it. It's like I have an agent of mine that's she's a vegan, and everybody does their thing, but I have she just does it for health reasons. I have another friend that's a vegan because they're concerned about animals, and I'm like, well, that's great, but you realize when they churn up a soy field that they're killing ground squirrels and insects and everything that you could, like, there's more death and debauchery when it comes to
sure.
So we all have our little platforms we want to stand on or whatever, but the reality is none of us really know what is going on,
and that's my whole point.
Yes,
this is all being baked into speculation.
Correct. Yes.
Right.
Yes.
And when you triple my premium,
and you're telling me because it's climate change, then I need to drive my Tesla and stop driving a car with gasoline.
And so to me, there's a little bit of a, I don't call it agenda. I don't know what I want to call it, but when you start moving speculation into a actuarial based business, you're cooking books.
Yes.
That, to me, is what you're doing.
Yeah.
Right?
You're raising costs.
Look
and justifying
at loss.
They're going, it's your fault.
Right. Yeah. Don't speculate that we're going to have major hurricanes, because this year was a really calm hurricane season.
Yeah,
it really was. We didn't have a whole lot of hurricanes. Now, the wind and hail was bad. Yeah. Right. We had bad wind and hailstorms, but we didn't have the major hurricane.
Yes.
Right.
Yes.
We did have the nasty wildfire.
Yes.
And that was horrendous.
Yeah. Well, that was calls from lasers out of the sky, though.
Hey, look, the aliens?
No. This wasn't aliens. This was satellites that beamed down.
This Elon Musk's fault.
Heat waves could be. I don't know. That saved all the billionaires. Didn't burn any of their houses down, but got everybody else. No, there's a lot of crazy stuff there. But look, one of these days I'm going to have a conspiracy podcast that everybody would tune in. Yeah, I keep my crazy at a minimum on this. Usually, I don't even. This is stretching it for me with you.
Dude, I tried to avoid you when you asked me to come back on. I'm like, he's coming up on 100. I want to be the 100. Right? I want to be at the 100, not 93rd.
We're close. I got to start. You say that. I got to plan that. I got to make that a little bit more of a bigger deal. Maybe I have a couple people on, and we'll go for a couple hours. Although I might do 100. Really start. Maybe we'll drink, and then
I was going to say maybe we can break the Tito's out.
I'll never have another listener again because everybody will stop.
Like, I don't know. Maybe you'll get more listeners.
That dude's insane. That guy's insane. Conrad's you might be on the show with us, Conrad. It might be like you, me, Brad, and Cody, and we'll all just sit around and drink whiskey and get drunk and talk about conspiracy theories. I don't know.
We do this after hours.
Yeah, well, I mean, it'll have to be. I don't know how to do that. Maybe I won't do that.
Uber rider,
maybe I won't do that one live. That one we won't go live. We'll do it.
We can edit it.
Yes, that way at least I can cut out some stuff if it gets really gnarly. I'll just put that one on the.
We got 7 more podcasts. We're probably talking May. We're talking April.
No.
You better start playing the party.
Try February, bro. I mean, I do 2 a week at this point. So we're gonna get there real fast.
So I'm your first for the year.
You are. Well, actually, Katie Jane was my first for the year. We did because she was out of school, and it's hard to get people, around the holidays. So we did our teen finances one. So she was my first guest, but you were my second.
I saw the prelude to it, but I didn't get to see it.
Yeah. So, it was riveting. She just loves doing it. She was so excited about coming on.
Oh, I'm sure. She's a kid in today's world.
God,
where's the camera?
No. I'm being incredibly sarcastic. No, she hates it.
She does.
Oh yeah. She, because I get her involved in this. She wants to have nothing to do with this. Like her friends will sometimes like, oh, I heard your dad's thing, or the friend's parents or whatever, and she just rolls her eyes. Like,
I watch these realtors that put their kids in their videos.
Yes.
Kids are just like,
oh god, she is not happy about it ever. But
they only want the camera when they're in control.
That's absolutely correct. And especially when it comes to talking about money, she's like, I don't want to. If we want to talk about Harry Styles or the Arctic monkeys or whatever,
all she knows is dad's got plenty of money.
Grey's Anatomy or whatever it is, and it's running out these days.
She's driving though.
You got to do some more loans to make that happen. So, all right. Well, I'm glad you brought up the 100th episode because I got to start planning that. So I guess I got to make that something of a deal. So
really trying to hold out.
Yes. I'm well now that it reminds me. I'm appreciative. All right. Well, we're an hour in, so we're gonna wrap this up. Brad, thank you so much as always for coming in and doing this with me. Again. more than anything, the number one takeaway from this is get you a friend in insurance. Get you a Brad. All right. Find you a Brad that you can call.
Or just call Brad.
Or just call Brad. I mean, if you're here in DFW, call Brad. All right. If you're anywhere else in Texas, call Brad. He'll help you. This is the one thing I will say.
Of that, not all of Texas is having this issue. It's really the DFW area.
Yeah. Well, because we have so many people that come in here too.
And the weather.
Yeah. The weather too. But anyway, so let's see, I got my market update coming again on Tuesday next week. And then next Thursday, I am going to have a special guest. I made a change recently, employment wise, and I'm going to bring on CEO of my new company that I'm with. We're going to chat about a few things regarding our company, but talk about the market in general. He's a pretty sharp guy. Obviously, he runs $1 billion mortgage company, so he's got a few things that he understands. So we're going to talk, kind of dig into a few things there. But so stay tuned for that one. That'll be next Thursday. And
he's
then
going to have some brains to navigate this market the last few years.
Man, he's managed to survive. We're all trying to tread water, man. Just keeping our head above. So thanks for everybody that stuck around. We'll see you next week. And Brad, always appreciate you, man. And we'll see you back around.
Thanks for having me.
Yep, 100 episode coming up.
All right.